Hi, hello, how are you? Namaste, my dear friends. This is Mohammed Rafi, faculty on indirect taxes. I am also the author for the CMA final course material paper number 19, Indirect Tax Laws and Practice. Of course, I wrote the book for the indirect taxes published by the Bharat Law Publications, pan India basis now available in the market, 30th edition. Of course, I am also a good faculty on indirect taxes. I will take up the entire syllabus applicable for your examination. Dear friends, let us start now with new chapter, very important chapter, scope of supply. Under the scope of supply, we have, my dear sir, supply includes, supply excludes. Supply includes section 7, subsection 1, clause A, clause AA, clause B, and clause C. When we refer supply excludes, we have section 7, subsection 2, clause A, negative list. Now it is got amended based on the Finance Act 2024. I will refer that also while explaining elaboratively negative list. Section 7, subsection 2, clause B, which refers government or local authority, if they provide these services acting as public authorities, also supply excludes. Let's start now. Supply includes. One by one is as follows, my dear friends. If you refer here, section 7, subsection 1, clause A says supply includes the following: all form of supply of goods or services such as sale, transfer, barter, exchange, license, lease, rental, or disposal. There are 8 points: sale, transfer, barter, exchange, license, rental, lease, or disposal. These all supply of goods or supply of services or both should be for consideration. And last but not the least, it should be in the course or furtherance of business. What do you mean by consideration? It may be monetary consideration, it may be non-monetary consideration. Meaning thereby paying something with expectation return, namely payment with reciprocity, is called as consideration. Payment without reciprocity is only a payment, not a consideration. What do you mean by reciprocity? Exchanging the things for mutual benefit. You do for me this, I will do for you this. That means thereby, simple example, Rafi sir says, my dear beloved friends, students, you please pay the fees to me. I will provide the subject in a beautiful manner. Thereby, once you complete course under my particular lectures, after that you can competent to even to practice also. Like that, Rafi sir told to their students, and student paid the fees with the intention Rafi sir is going to be teach subject elaboratively, understandable manner with ample of examples. That is the expectation of my beloved students, and they paid the fees to me. For me, it is a consideration because I promised I will do the needful for you people to qualify with highest marks in indirect taxes. That is called what? Reciprocity. If the payment with reciprocity is equal to consideration, where it cover under this category. If the payment without reciprocity is not a consideration. Example, you are going to Tirumala Tirupati Devasthanam Tirumala for taking the blessings of the Almighty Lord Venkateswara Swami, where you entered there and dropping in his hundi your savings as a donation to the Tirumala Tirupati Devasthanam Trust. You donated how much? Let us say rupees 10,000. Why you donated? Because you have a very much love and affection on the God. Out of that, you have deposited there. That means you paid the amount of rupees 10,000 as a donation, where you are not expecting anything in return. Get my point? Therefore, such a payment is no reciprocity, which is only a payment. Thereby, that particular donation not a consideration. If it is not a consideration, it is not going to cover here. Got my point? Coming to the point, last but not the least. Supply of goods, supply of services, or both should be in the course or furtherance of business. What do you mean by in the course or furtherance of business? What is my nature of business? Sir, I am buying and selling of laptops. If I supply the laptops, it is called as in the course of my business. Now, I have with me the old laptops, scrapped items, which I am supplying, which is not my nature of business to supply the scrap. But I got, after 1 year, 2 years, some scrap in my organization, which I am disposing of, which is furtherance of my business. Also will cover here. Resultantly, supply includes section 7, section 1, clause A says supply of goods, supply of services, or both, such as 1. Sale, transfer, barter, exchange, license, lease, rental, or disposal for consideration in the course or furtherance of business will come under the category of scope of supply, which might be attract the GST if the supplier is a taxable person, the person liable to pay GST, then obviously he has to pay the GST if it is no exemption specifically provided for that supply. Now, how to understand further presenting here each one. Sale. Sir, my dear friends, sale as such not defined under GST law, but the concept of the sale we can able to derive from the other provisions of VAT, value added tax we have. From there we can draw the attention of the term of sale. Sale means what? The permanent transfer of ownership of the goods for monetary consideration. It may be what? Cash or deferred payment, as the case may be. So ownership has been transferred on the goods from one person to other person for cash or for credit sale, as the case may be, which is called as a sale. Example, a retail shop sells furniture to a customer for rupees 50,000, which is a sale. Applicable GST? Yes. If the supplier is a taxable person, paying the GST has to pay the GST. If there is no exemption, obviously there is no exemption in case of supply of furniture, therefore liable to pay GST. So supply includes sale. Further, my dear, transfer. What do you mean by transfer? How to understand the term transfer? Definition. Withdrawn from other allied provisions, not from the CGST Act. A temporary or permanent transfer of ownership of the goods or services. Transferring of what? Any business asset. For what? Temporarily for consideration. Or it may be permanently transfer, as the case may be. Means a transfer may be involved revocable transfer or irrevocable transfer, as the case may be. One example, a manufacturer company transfers ownership of raw material to its subsidiary company, transferred for consideration. In that case, will come under this category. For example, if the supplier holding company supply the raw material, transfer the raw material to the subsidiary company for rupees 1 lakh, in that case, GST applicable because the supplier is a taxable person. Got the clarity, my dear friends? You got my point here? So, sale, we come across transfer, and we come across further barter. What do you mean by barter? Exchanging the things in a different things. Example, hey mister, you give the cell phone to the particular, you give to me this particular calculator and I will give to you cell phone. What is this? Is a barter. Exchanging the different things. Example, a bakery provides 100 cakes to a catering company in return, in exchange for catering service provided to a bakery food items. Bakery supplied by bakery wala to get a bakery items, then is called exchange. But here it is not so. bakery wala given the bakery items, namely cakes, to get what? Catering item, namely food items, which is a different from what is given. In that case, barter. Simple to say, my dear friends, you give to me old washing machine, I will give to you new washing machine. That is called as exchange. Barter means you give to me old washing machine, I will give to you new cell phone. You give to me old cell phone to me, I will give to you new color television. So exchanging the different things for monetary benefit means what? Monetary benefit may be involved or not involved, means it may be non-monetary benefit also. In that case, it is called barter. Exchange of goods or services without monetary payment. In that case, goods are given for getting the goods. For example, furniture is given to get new laptops. In that case, it is what? Barter. Supplier is a taxable person liable for GST. Sir, how to earn the value? That value under, don't worry, which is under the valuation rules under the value of supply. There we will discuss. For the time being, you understand the sale, transfer, barter for consideration in the course or furtherance of business covering under the scope of supply. Further, my dear friends, when you talk about exchange, just don't told no, exchanging the things in the same thing. Example, a customer exchange the old smart cell phone and pays 20,000 rupees to purchase a new smartphone worth rupees 50,000. Meaning what? Supplier selling the new smartphone for rupees 50,000 but getting how much? Partly in cash, rupees 20,000, partly in kind, old smartphone whose that worth is maybe considered here as a 30,000. Resultantly, supplier being a taxable person liable to pay GST on rupees 50,000. That means exchanging the same thing, old smartphone plus rupees 20 rupees given by the buyer to the seller, seller giving to the buyer worth rupees 50,000 of new smartphone, which is called as exchange, covered under the category of scope of supply. GST will apply. Further, my dear friends, license, granting right to use intellectual property or granting right to use land or granting the right to use other goods for a limited period of time is called what? License with an agreement. Example, a software company licenses its accounting software to a business for rupees 1 lakh annually for 5 years, for example. In that case, is a license in the course of furtherance of business, which is a supply. Supply includes. Here there is no exemption. If the supplier is a taxable person, liable to pay GST on the license fee. Got the clarity, my dear friends? Further, rental. What do you mean this? Providing goods for immovable property, providing goods or immovable property on a rental basis for consideration. Meaning what? Goods, namely the color Xerox machine is given on rental basis for 6 months to a audit firm. Is a rental. No sir, I own the property. This property I given for rental basis to a commercial company. I'm a Infosys company. Infosys company own this property. This property given by Infosys company to TCS company. For example, I'm telling you, in that case, such a rent will attract GST. Applicability of GST, yes, there is a GST applicable on supply of rental for consideration. Further, lease. What do you mean this? Granting the right to use goods or property for specific period of time in exchange for consideration. Meaning thereby a company leases machinery to another business for rupees 10,000 per month for a year. In that case, that lease rental charges obviously will attract GST, if the supplier is a taxable person, GST is applicable on these payments, on lease payments. That means rental or lease. Further, disposal. Definition for disposal simple. We drawn from other allied general practices, not from the GST law. These definitions: sale or removal of goods as scrap or disposal items for consideration. Example: a company disposes of old computers and sells them as a scrap for rupees 25,000. It is best example to say furtherance of business. In that case, there is a consideration in the course of or furtherance of business, supply of goods. Therefore, it is covered under the scope of supply. Got the clarity, my dear friends? So, we came to know sale, transfer, barter, exchange, license, lease, rental or disposal. 8 items for supply for consideration in the course or furtherance of business is covered under the section 7, subsection 1, clause A. Further, my dear friends, here conditions for applicability of the GST. Just to know, there must be consideration. It may be monetary consideration, it may be non-monetary consideration. There might be consideration, and it should be a business context. That means to say that the personal transaction not going to cover here. I will explain to you in due course. And the supplier recipient relationship should be there. That means to say that there must be a supplier, there must be a recipient. 2 or more parties should be involved, except the points which is covered in the schedule 1. Schedule 1 is a specific exceptional nature. Later on I will cover. For the time being, my dear friends, supplier and recipient relationship, there must be 2 or more parties are involved. One cannot supply the supply to himself. Am I right or not? That's why what is required? Supplier recipient should be there. Further, my dear sir, business context compulsory should exist. What do you mean by business context? You are telling in the course or furtherance of business transaction, a company sells product as part of its regular business operations. Sir, I am buying selling of BMW cars. I am a dealer of BMW car. It is my business. But personal transactions should not be covered under this category. If an individual sells personal items not related to business, it is not a consideration. It is not considered as supply under GST, even though supply may be made for the consideration. Example, I will tell you, my dear friends. Ample of examples in my class. Yes, take it to granted. Rafi sir means explaining with the examples. Each and every provision, right from the scope of supply to the level of the advanced concepts. Sir, I'm a retired professor. I am Mr. Raman.
After 35 years of service as a dedicated professor, Mr. Raman, a retired teacher, decided it was time to part ways with his beloved ambassador car. It wasn't just a car. It was a symbol of countless memories. But instead of letting it gather dust, Mr. Raman decided to turn it into an opportunity. With just a few clicks on CardAco, the trusted platform for buying and selling used cars, he listed his vintage vehicle.
Therefore, he sold the car for rupees 2 lakhs to CardAco, a particular used car selling company. CardAco wala purchased from me my old car. So I supplied the goods for rupees 2 lakhs consideration. But I am not liable to pay GST because I am basically not a businessman. I am an individual. My personal asset I supplied, which not attract GST because it is not in the course or furtherance of business. This is what here this says: personal transaction supplied by an individual should not be considered under the scope of supply. GST not apply is the meaning of it. Furthermore, so far I given some points to you, a summary of this. Section 7, Section 1, Clause A, supply includes sale, barter, rental, disposal, lease, license. You get my point? Or exchange for consideration in the course or furtherance of business. There is a consideration in their course or furtherance of business. GST is applicable is the meaning of it. Further, my dear friends, Practical application of section 7 subsection 1 class A. Identify the transaction type, namely determine if the transaction falls under the sale, transfer, barter, exchange, license, lease, rental or disposal. Thereafter, check for consideration. Is there, sir, monetary or non-monetary, as the case may be. Verify the business context, namely business context should be appear, namely in the course or furtherance of business. If all the three are there, then simply apply the correct rate of GST on such supply and pay to the department. Got the clarity, my dear friends? Any difficulty in the given case practical application of this? Identify the type, namely is a sale, transfer, barter, exchange, license, rental, lease or disposal for consideration. Third one, in the course of furtherance of business, all the three conditions are exist, satisfied, then apply the GST on such supply. Got the clarity? Further, as I told you, personal transaction or free supplies, no GST. Personal transaction in the sense, not in the course or furtherance of business. Then sale, transfer, barter, exchange, license, lease, rental or disposal, not a supply. If it is a free, no consideration, then it is not going to cover under section 7, subsection 1, class A. Therefore, not applicable. GST is not applicable. Got the clarity, my dear friends? Personal transactions. Here, when the individual sells personal items or conduct non-business transactions, these are not considered supplies under the GST since they are not in the course or furtherance of business. Free sample, while many assume free items are not taxable, not all supplies without consideration fall outside the GST purview. Some may sell be subject to GST, some may still be subject to GST under the specific provision. What this fellow says here is, hey Mr. Taxpayer, just because of free sample you given does not mean that no consideration, no GST. We accept consideration must be there in general transaction, but in not all cases, in all cases you cannot say free sample, no GST. Reason? There are certain transactions which covered under Schedule 1. Supply of goods, supply of services, even without consideration is a supply. So that is there. Keep in mind and read this. Free samples. Free means no consideration. In all cases, no consideration cannot be considered as not a supply. There are some few transactions covering under the Schedule 1. Such cases, even without consideration is a supply. So be careful. This is what that fellow hinting us. Further, my dear friends, in general, my dear, no doubt to say, when you say section 7, subsection 1, class A, if you say, there must be supply of goods, supply of services, or both, such as sale, transfer, barter, exchange, license, lease, or rental, or disposal for consideration. In the course or furtherance of business, if there is no consideration, not covered in section 7, subsection 1, class A, it is not under that particular supply. But one cannot say wherever no consideration, no GST, you cannot say. Reason, we have a Schedule 1 transactions where activities or transaction even without consideration is a supply. If covered there, even no consideration, such a supply will apply GST. Is it clear, my dear friends? Further referring to you, my dear friends, the concept of section 7, subsection 1, clause AA. supplied goods or services by a person other than individual to its members or constituents or vice versa. How to understand this? Simplified manner presenting now with the ample of example. Supply includes as follows. Look here. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration. Supply includes. What is this? It's a very powerful clause covering the elaborative manner, massive level of transactions. Overview of this section 7.1 clause AA. Activities or transactions by a non-individual person, namely other than individual, to its members or constituents or vice versa for consideration. It is retrospective manner effective from 1st July 2017 from appointed day onwards. Scope applies to entities like companies, partnership firms, LLPs, societies and clubs, but excludes individuals. I will tell you what it is. Referring here, practical scenario, supply of goods by a club membership scenario. In that case, here a sports club supplies gym equipment to its members against a monthly fee of rupees 5,000 rupees. In that case, gym has been given, gym equipment is given. Charging monthly how much? 5,000 rupees is a supply. If permanently given, supply of goods. Temporarily given, supply of service. Who given? The club. To whom it is given? To their members. Means club is non-individual. Given to its members is a supply because the consideration is involved. Further, the fee collected is subject to GST as the transaction between the club and members is treated as a supply. Transaction further here referring transaction process. Monthly membership fees are treated as consideration for the supply of service. In the sense here, temporarily given. In that case, making them taxable under the GST. Further, my dear friends, case study, services by housing society. Scenario, a particular residential welfare association RWA located Chennai charges members rupees 8,000 per month for maintenance and other services. GST applicable? Yes, applicable, because GST is applicable on particular charges exceeding rupees 7,500 per month per member is taxable supply. Enter value will attract the GST. Further, calculation means what? GST applicable on what? On the entry value of rupees 8,000 per month per member will attract GST in the hands of RWA. If the RWA is a registered person, then liable to pay GST, because if the threshold limit for registration has been exceeded for the Residential Welfare Association, they are liable to pay GST. Got the clarity, my dear friends? Further referring here, example, supply of services by a company to shareholders. Service provision, what is it? Is a company provides annual reports and financial updates to its shareholders. Shareholders pays an annual subscription fee rupees 2,000 for these services. Will attract GST? Obviously. The subscription fee is subject to GST as it's involved the consideration for the services provided. GST liable to pay by supplier, namely the company in the given case. Because company is a non-individual, provide these services to its own individuals, their own members. Shareholders are the members of the company. In that case, will attract the GST. Do not say, sir, shareholder is the owner of the company, therefore company and shareholder both are one and same. You cannot say. Company is different, its shareholders are different in the context of the GST law. Further, my dear friends, contribution to partnership firm. For example, a partner contributes machinery to its firm for use in operations. The firm compensates the partner in cash or in kind for the machinery. In that case, who is supplier? Partner. Who is the recipient? Partnership firm. The individual supplied to its own partnership firm machinery for consideration is a supply. You cannot say both are one and same. Is a supply of service liable for GST. If there is no consideration, valuation as per the valuation rules. Got the clarity, my dear friends? Further, one more case study here. Events organized by societies for members. A club organizes an annual dinner for its members. Club charges rupees 1000 per member for the dinner. Who is supplying? Club, namely society or an organization. To whom? To its own members. By charging what? Rupees 1000 per member for the given supply. In that case, GST will apply in the hands of the supplier. Got the clarity, my dear friends? Further, impact of section 7 section 1 clause AA on different entities. Yes, section 7 section 1 clause AA has far reaching implication for the various clients, various entities, companies, clubs, housing societies and professional associations must now consider GST implications on transaction with their members or constituents, fundamentally charging their financial operations and compliances requirements. Further, my dear friends, exclusion of individuals. What do you mean this? It means, my dear, I am Mr. Rafi, unregistered individual. You are a CA, CMA, CS student. A transaction between us not covered under the section 7(1) AA, because here the transaction covered only when there must be a person other than individual, and the other one is its own members. Its own members. If own members provide services to them, supply of services. If the person other than individual provide these services to its own members, is a supply. Supply the goods, supply of goods. Supply services, supply of services. Like that. Only covered here. No sir, I am a member of the particular association. I am an individual, unregistered person. I provide services to another individual who is also a member of the association. But we both individuals are unregistered persons. In such case, such a supply between us is not going to cover under the category of section 7 section 1 class AA is the meaning of it. Example you see here, a person sharing cost with friends for a group vacation is not subject to GST under this provision. We are the friends, we went for a tour, the expenditure 1 lakh rupee I incurred. I paid that amount. In that case, I am getting that amount from my friends. Each friend, hey, you please rupees 10 rupees pay. 10 friends we are. So each contribution per head is 10,000 rupees. I am collecting from my friends, which is not covered in this category, is the meaning of it. Further, my dear friends, what are the key takeaways from section 7 section 1 clause AA? Here they said, here this case I am referring, first one, this case I am referring, broadness, the definition of supply under the GST includes transaction between entities and their members. Crucial one, consideration must be involved. Wide range of coverage. It covers to companies, societies, association, partnership firm and all. This is applicable retrospectively from 1st July 2017 onwards. Is the key takeaways. Meaning thereby, supplier should be a non-individual, recipient should be their own members. Or supplier may be the individual who provide services or goods to non-individual who basically are member of the particular non-individual. In that case, it covers this category. But one thing is clear, the supply should be for consideration. That must be involved. Of course, in the given case, the supplier is non-individual, supplied to his members, or members being individuals supplied to the person other than individual for consideration, covered under this category. Section 7, subsection 1, clause AA. Got the clarity, my dear friends? Furthermore, referring to you, my dear sir, section 7, subsection 1, clause B, import of services. Meaning, here, supply includes import of services for consideration whether or not in the course or furtherance of business also be covered under the clutches of scope of supply. Supply includes. How it is elaborating is as follows, my dear friends. Here, import of services, as just now told you, import of services for a consideration whether or not in the course or furtherance of business. First and foremost, my dear, when you say import of service, how can you say a service is import of service? We have a definition, my dear. Section 2, subsection 11 of IGST Act, which says that supplier of service located outside India, recipient of service located in India, place of supply is in India. If all the 3 points are satisfied, import of services as referred under section 2, subsection 11 of IGST Act. Having that into account, referring here, import of services, key elements. 1. Receipt of services from a supplier located outside India by a recipient located in India. This point I am referring. Further, consideration must be involved. Services must be provided for a consideration which can be monetary value or non-monetary value as the case may be. And furthermore, there must be a business purpose. That business purpose element may exist, may not be exist. GST applies whether the imported services is for personal use or in the course of business as the case may be. That means to say that the element of requirement of it should be in the course or furtherance of business, not required to levy the GST is the meaning of it. Let us see furthermore points here. What are the additional key points? As just now told you, place of supply should be in India. Look here, the place of supply of import of service is deemed to be located in India. Must be in India. In that case, generally, recipient reverse charge applicable. Recipient liable to pay GST. GST on import of services is payable by the recipient under the reverse charge in general. There are some exceptional cases I will refer in due course. For the time being, import of services, taxable supply or same apply. Taxation ensures that imported services are brought within the GST framework, maintaining the tax parity. Means not only in India transaction will attract GST, cross-border transaction also will attract GST is the meaning of it. Further, my dear friends, referring to you. Practical scenarios. Import of professional services. Here, I am referring here for kind consideration. Cross-border consulting scenario. A company in India engages a US-based consultant for strategic business advice for rupees 10 lakh. This represents a typical import of professional services cross borders. Resultantly, will attract IGST. Who liable to pay GST? The recipient under RCM. GST treatment. GST applicable under the reverse charge mechanism. The Indian company must pay IGST at the applicable rate on rupees 10 lakh as the recipient of service. Got the clarity, my dear friends? Furthermore, presenting import of digital services. Meaning what? The service can be downloaded, which is readily available in the cloud. Meaning thereby, like you are aware of that, the antivirus software, or otherwise we can call it as the iCloud, OneDrive, or any digital content readily available in the cloud. One should make the payment and the system software permit to download. That means system software will provide the services rather than involvement of human beings. The minimum involvement of individuals takes place. Otherwise, the system software itself will provide the services. For example, my services are available, my coaching on indirect access to budding CA, CMS, CS professionals available in the cloud. Rafi sir, IT classes readily available. You can download by making the payment. It's called what? Digital services. Will be categorized as OIDR services, online information database access and retrieval services. In such case, try to understand. In case of OIDR services, supplier is from outside India, recipient is in India, the recipient is non-taxable online recipient, namely unregistered individual who import these services for their personal purposes. In such cases, for consideration will attract the GST. RCM not applicable. If and if FCM only apply. Forward charge mechanism. Who is a supplier? OIDR services. Where is he? He is located outside India. Then he has to pay GST in India. He should have to have a place of business in India, or at least a representative in India to pay the IGST. Not a RCM, is a FCM. Forward charge mechanism. Supplier liable to pay GST. Conditions: when a supplier must be OIDR services, supplier located outside India, recipient is in India. For consideration, the recipient is non-taxable online recipient, namely unregistered individual, for example, who is import the services for personal purposes. In that cases, for consideration, supplier only liable to pay GST, having a place of business in India. If not, a recipient, the supplier should be appoint a representative in India to pay the GST in India. Is it clear? With that, come to this particular category where I am referring here. Practical scenario of import of digital services. Example, my dear, look here. An individual who is unregistered person, we categorize it as non-taxable online recipient, subscribing to Netflix, a foreign OTT platform, for personal entertainment, pays rupees 1000 per month for streaming services, for getting OTT services from Netflix. In that case, location of supplier, Netflix, outside India. Recipient of service, unregistered individual, namely non-taxable online recipient in India. Import the services for consideration, rupees 1000 per month, which is personal purposes. In that case, taxable supply. not exempted. Who liable to pay GST? Supplier, OIDR wala liable to pay GST. Look here, tax treatment. The GST framework for digital services. For online information and database access retrieval services, namely OIDR services, the foreign service provider is responsible for GST payment on the subscription fees. He should have to have a place of business in India. If not, a representative in India to pay the IGST. Further, my dear friends, a case where import of services, let us say educational services, other than OIDR services. What do you mean by other than OIDR services? That means a supplier from outside India should supply to the recipient in India, not that the system software will provide the services, not readily available as a package format, such as services, means other than OIDR services. In such case, my dear friends, if a services which is supplied by a supplier from outside India other than OIDR services to the recipient in India who is unregistered individual, namely non-taxable online recipient for consideration, then such a services absolutely exempted from the payment of the GST, namely IGST. Repeating again, a supplier is outside India, provide these services other than OIDR nature. Very good. Recipient in India must be an individual who is unregistered person, import these services for the personal purposes. Therefore, we categorize him as non-taxable online recipient. In that case, such an import of services for consideration absolutely exempted from the payment of the IGST. How to understand this? Let us see here with the example I am presenting for a kind consideration. Look here, my dear sir. Online foreign education. A student in India enrolls in a traditional distance learning program from a foreign university costing 1,50,000. This represents a typical non-OIDR educational service import where content is delivered through conventional online method. Means the professor is coming, sitting there, taking the classes. During that time, the student in India should present in front of the system and get the services. Once the class is over, not available for recipient to get the services. Therefore, it is not readily available in the cloud. It is providing on live basis, recipient in India receiving the services on live basis. Then such a services called as non-OIDR services. In that case, who receives the services? Non-taxable online recipient, basically unregistered individual. In that case, such a service qualify from exemption. When educational services are imported by a non-taxable online recipient, namely unregistered individual, and do not qualify as OIDR service, they are exempt from GST. Further, scope of exemption. However, this exemption is limited to non-OIDR services, meaning traditional online courses rather than automated digital services. Same case, if it is OIDR services provided to unregistered individual in India, attract the GST. For charge apply. Who liable to pay GST? OIDR wala supplier liable to pay GST, namely IGST. Further, my dear friends, referring from here, practical examples. Import of software services. Let us see here one example. Tech Solutions India Private Limited acquires enterprise level cloud infrastructure management software from Cloud Tech Incorporation USA for rupees 5 lakhs. The package includes customized modules for server monitoring, automated scaling and performance analytics. It is not a OIDR services, customized services. In that case, who receives the services? Service delivery. The software is delivered through digital download with ongoing technical support representing a cross-border digital service transaction between USA and India. In that case, GST treatment under the RCM reverse charge mechanism, IGST of rupees 90,000, namely 18% of GST on rupees 5 lakhs. Namely tech solution can claim full input tax credit with reporting requirement in GST or 2B and paying the tax from the payment of GST PMT 06. I mean to say that I will tell you. What is it is? Import of service tech solution in India. Liable to pay IGST on import of services under RCM. That he can claim ITC, the importer subsequently can claim ITC. That should be by way of reporting the GST or 2B and taking the credit in the GST or 3B while paying the GST. But while paying the GST, namely IGST on reverse charge rupees 90,000, the tech solution India Private Limited should make the payment through electronic cash ledger, that IGST amount of rupees 90,000. Then it is qualified for ITC if it is used in the course or furtherance of their business. Is clear, my dear friends? Further referring from here, import of services for consideration whether or not in the course or furtherance of business. Now, import of architectural services. In that case, yes, look here, my dear sir. In the given case, an Indian real estate developer commissions a luxury villa design project from Al Madina Architect LLC, Dubai. The rupees 20 lakhs project includes detailed blueprint, 3D rendering and structural calculations for 10,000 square feet residence in Bangalore. That means Indian company in India, namely a real estate company in India, by paying the rupees 20 lakhs, import these services, which is not a OIDR nature. In that case, cross-border service delivery. The Dubai firm delivers services through video consultations, digital blueprint and quarterly site visit as per section 7(1)(b). This qualifies as import of services since the supplier is located outside India. Taxable delivery. Who liable to pay GST? Recipient in India. RCM apply. Recipient liable to pay GST. GST treatment in the given case. Here, the Indian recipient must pay IGST 18%, which is 3,60,000. 18% on 20 lakhs under the RCM. The transaction requires reporting the GST or 2B by raising the self invoice and make the payment, which is auto populating the GST or 2B and claim the ITC subsequently if you are in the course of furtherance of business. Since it is for commercial development, full IT is available to the recipient. Further, my dear friends, practical scenarios continues. Import of personal architectural services, not in the course or furtherance of business. In that case also will attract GST because import of services for consideration, whether or not in the course or furtherance of business, highlighting in this given example. Look here, my dear. Design project scope. Mr. Rajesh Kumar, a GST registered individual in Bangalore, hires Al Madina Architect LLC, Dubai for rupees 20 lakh residential project. The contract covers design, interior layouts and landscape planning for his 5,000 square feet personal residence with no business purpose. So import of services by whom? By a registered person for personal purposes. In such case, it is attract the GST because they import these services for rupees 20 lakhs. There is a consideration. Cross-border service delivery. Services are delivered through online consultations, digital blueprints, and virtual design reviews. Monthly videos, calls, and cloud-based file sharing facilitates the project. This qualifies as import of services under Section 7(1)(b) due to overseas provider status. So, tax treatment, import of services other than OIDR by a registered person for personal purposes will attract GST under RCM. Tax treatment. As a registered person, Mr. Kumar must pay 18% of IGST on rupees 20 lakhs, namely 3,60,000 under the reverse charge mechanism. However, input tax credit cannot be claimed since the service is for personal use. This transaction requires payment of tax. PMT06 challan you use and make the payment, and do not take ITC, though it may be reporting in the GST or 2B, it is not a eligible credit, is a blocked credit for you. GST or 2B, input tax credit, static statement, should not avail the ITC, is the meaning of it, because personal purpose imported, but liable to pay IGST. Got the clarity, my dear friends? Furthermore, referring here for a kind consideration, my dear, important clarifications. OIDR services to non-taxable online recipient. In that case, taxable. Who liable to pay GST? Supplier liable to pay GST. If it is other than OIDR services to non-taxable online recipient, exempt supply. Now refer here. Here I am referring simplified manner. Online information database access retrieval services are digital services provided over the internet. Example, streaming platforms like Netflix, music services like Spotify, and cloud storage services from outside India into India. It is under the GST if provided to non-taxable online recipient for consideration. FCM, forward charge. GST collection. For OIDR services, GST is collected by the foreign service provider under the specific OIDR framework. Is it clear, my dear friends? Further referring from here. Important clarification, reverse charge mechanism. When we will apply here? Step 1. Applicability. For most imported services, non-OIDR nature, GST is paid by the recipient in India under the reverse charge mechanism. Process. The recipient calculates and pays the GST on that particular import of services directly to the government. Further, compliance. Recipient must self-assess their GST liability and ensure timely payment and reporting in the GSTR in their GSTR returns. Obviously, they have to comply the provisions being a recipient. Now I am going to refer to you the conclusion part. Sir, what is imported? OIDR services. Who imported? Non-taxable online recipient for consideration. Then it is taxable forward charge. Import of services other than OIDR nature imported by non-taxable online recipient for personal purposes for consideration. Exempt supply is clearer. On the other hand, import of services may be OIDR nature or other than OIDR nature. Who imported? A person who is registered under the GST. In that case, RCM apply. Who liable to pay GST? Recipient liable to pay GST. It may be OIDR service, it may be other than OIDR service. Got the clarity, my dear friends? But what is the requirement here is such import of services for consideration that should be exist. Is it clearer? As simple as that. Section 7, subsection 1 clause B, import of services for consideration whether or not in the course or furtherance of business. Got the clarity? You got my point? Further referring, my dear friends, very important, section 7, subsection 1, clause C. Activities or transactions covered under schedule 1 even without consideration is a supply. Very important area I am referring. Let us start now. Section 7, subsection 1, clause C. Activities covered under schedule 1 even without consideration is treated as supply, namely deemed supply. How to understand this? Provision. The activities specified in schedule 1 made or agreed to be made without consideration shall be treated as supply under the GST. The scope. What is the scope of this? This provision broadens the scope of GST by including specific activities as supply even if they are carried out without consideration. Very, very important. But it should be covered under the schedule 1. These activities are detailed in schedule 1 of the CGST Act. That activities covered under schedule 1 only can be considered as a supply even without consideration. How to understand this? Very simple, my dear, referring here one by one. Broadly, my dear, there are 4 transactions. There are 4 transactions, 4 type of supplies. One, first and foremost, look here. Business assets transfer. Permanent transfer or disposal of business assets where the input tax kit has been previously availed. This ensures GST implications when the asset are given away without payment. Meaning thereby, I already claim the input tax kit on asset which is purchased by me, which is my business asset. Now I am disposing of, transferring off permanently without any consideration is a supply. Further, transaction 2. Transactions between related parties are distinct persons. Supply of goods or services between related persons. I will explain to you who are the related persons. Or distinct persons. I will also explain this. Who are distinct persons? As specified in section 25 of the CGST. When made for business purpose. That is important. However, employer to employee gift valued up to rupees 50,000 per financial year to one employee are excluded from this provision. That means in a financial year, the gift given by employer to an employee per employee basis in a financial year, the gift value should not exceed rupees 50,000. In that case, it is neither supply of goods nor supply of services. Is clear? Point number 3 in the schedule 1. Principal agent transaction. First one, supply of goods in 2 scenarios. Supply of goods by the principal to his agent, where the agent agrees to supply the goods on behalf of the principal. And second point, supply of goods by the agent to his principal, where the agent receives the goods on behalf of the principal. In that case, transaction between the principal and agent, even without consideration, is a supply, but it should be purely restricted to supply of goods, not supply of services. Understand this point number 3. I will explain, don't worry. Elaborate will explain. Referring the point number 4, schedule 1. Import of services by a person from their related person or any establishment located outside India. Their establishment located outside India. Sorry. Repeating again. Cross-border related party services. Import of services by a person from their related person or from any of their establishment located outside India when conducted for business purposes, meaning thereby import of services by a person in India from his related party or from an establishment outside India, their own establishment from outside India, import these services in the course or furtherance of business will attract IGST even that import of services without consideration. Don't worry, I am going to explain to you elaboratively all these 4 transactions which are covered under Schedule 1 even without consideration is a supply. One by one I am referring here is as follows, my dear friends. First point, permanent transfer or disposal of business assets. How to understand business assets with ITC? Assets on which input tax credit has been previously claimed by the business, such as computers and equipment. Now, transfer without consideration. When these assets, what are they? Computers and equipments, are permanently transferred or disposed of without payment, such as gift old computers to charity. So what? It is supply, because on such asset already avail the ITC, GST will apply. Such transfers are treated as supply under the GST, requiring the tax payment on the value of disposal of the asset. Further, my dear friends, transaction between related persons or distinct persons. First of all, who are the related persons? When that comes into picture, I will show you an explanation given in section 15 of the CGST with regard to related person. One by one I am presenting here. Related persons, officers and directors. When executives serve on multiple boards, transactions are considered supply. Then officers or directors of one company, also officers or directors of the other company. Then these two companies are related parties. Legally recognized partners, partners, partnership firm, when without formal agreement are subject to GST. Legally recognized partners, partnership, even without formal agreements are subject to GST, meaning thereby ABC company, partnership firm, ABC are partners. There is XN company, ABC and D are partners. Here in the partnership firm, ABC and D are partners. One more partnership firm, ABC are partners. ABC are partners of the one partnership firm, also be partners of the other partnership firm. In that case, these two partnership firms are called as related persons. Employer and employee relationship is categorized under related persons. But the gift given by employer to an employee in a financial year not exceed rupees 50,000, neither supply of goods nor supply of services. That you are aware of that. Further, referring here, share ownership are entities with 25% or more share ownership are considered as 8%, namely X Limited holding in Y Limited 51%. That means what? X Limited is holding company, the other company is separate company. In that case, these two are 80%. It is sufficient 25% above shareholding held by one company in another company, or instead of a shareholding, voting rights not less than 25% voting rights held by one company in another company. These two companies are called what? Related parties. It may be control and influence, direct or indirect control over another entity, classified them as related parties. Example I will provide to you. Look here, my dear sir. A Limited holding 60% shares in B Limited. B Limited holding 80% shares in C Limited. Now, A and B are related parties. Direct relationship. B and C also related parties, namely direct relationship. If so, A limited and C limited also related parties indirect relationship. Meaning A limited can control C limited through its B limited. Therefore, ABC as a whole called as related parties. Further referring to here, my dear friends, coming to furthermore point, members of the same family. My dear sir, we have section 2, subsection 49 of the CGST, which talks about family definition under the GST. Section 2, subsection 49 of the CGST Act talks about family, which includes spouse and their children, and parents, grandparents, brothers, sisters, who are mainly or wholly dependent on such person. Then we call them real parties, real persons. In that case, we consider it as Schedule 1 transaction. That means transaction between real persons, even without consideration, is a supply. Now coming to the point here, what about the transaction relating to like this? The transaction relating to distinct persons, between distinct persons. I will tell you what do you mean by distinct persons. My dear sir, distinct persons as defined and as explained under section 25 of the CGST. Distinct persons simple, my dear. Head office, branch office, having multiple states, place of business, multiple GST registrations under the one PAN number. We call them distinct persons. Transaction between them we are called as supply, even without consideration, because the transaction covered under Schedule 1, point number 2. That's why. So referring here, now the points one by one. Provision. See here, supply between real persons one by one. The transaction between real persons or distinct persons, namely branch office of the same entity in different states, are treated as supply even without consideration. Here, definition of real persons, just to refer to you. Real persons includes family members, employer-employee relationship, or entities with substantial control over each other. However, the gift given by the employer to the employee in a financial not exceed rupees 50,000, neither supply of goods nor supply of services, which is clear point. Further, referring here, supply between real persons and distinct persons. How to understand this with example? Distinct persons. Look here, my dear sir. A company's branch in Maharashtra transferred goods to its branch in Karnataka without consideration. This is a supply, GST applicable. GST is payable by the, as the branch transfers are treated as distinct persons because both of them are registered persons, two different registrations from one state to other state. The supply of goods by head office or branch office, that case will attract GST in the hands of the supplier. Further, employer. A company gifts a laptop worth rupees 60,000 to an employee in a financial year. It is more than rupees 50,000. Therefore, it is supply. Who supplied? Supplied by the employer. It is in the hands of supplier, liable to pay GST on the entire value of rupees 60,000. That is to understand. Not the over and above rupees 50,000. Because you violate the condition. Up to rupees 50,000 in a financial year to an employee is neither goods nor services. But if it is more than rupees 50,000, gift given by employer to employee without consideration, which will attract GST even without consideration, because it is covered under the Schedule 1. Got the clarity, my dear friends? Further, my dear sir, referring here, supply of goods between principal and agent. My dear sir, one should understand basically, in the case where supply of goods by the principal to his agent, where the agent undertaken to supply the goods on behalf of the principal, which will come into the picture under Schedule 1, even the supply made by the principal to the agent is without consideration, will attract the GST only when when the agent act independently, namely after receiving of the goods from the principal by the agent should supply the goods on his own account by issuing his own invoice to his customer. In that case, a transaction between principal to agent, supply goods by principal without consideration is a supply in the hands of principal, GST will apply. For example, Mr. P of Pune, principal, supply the goods to Mr. A of Ahmedabad, who is worth rupees 5 lakhs. A of Ahmedabad, agent, who sell the goods to E of Ernakulam by issuing his own invoice. Mr. A of Ahmedabad issued his own invoice. He is competent to transfer the title and the goods to E of Ernakulam. In that case, supply made by P of principal, namely P of Pune, to A of Ahmedabad is a supply even without consideration. Worth rupees, for example, open market value 5 lakhs, that 5 lakhs will attract GST in the hands of P of Pune being a supplier. Got the clarity, my dear friends? Vis-a-vis, if the supply of goods by the agent to his principal, where the agent undertakes to receive the goods on behalf of the principal. Meaning what? Examples presenting here one by one. Here, if you refer, my dear sir, there must be some conditions. What are the conditions? Supply of goods from the principal to agent or vice versa is treated as supply. If the agent undertakes to supply the goods on behalf of the principal. Condition number 2, the agent undertakes to receive goods on behalf of the principal. So, how it is referring here? Example, a manufacturer sends goods to distributor agent for further supply. GST applicability. GST is applicable on the value of the goods supplied to the agent, where the distributor or the agent of principal, namely manufacturer, should sell the goods on his own account. In that case, supply between principal to the agent, even if the consideration is supply, where the agent undertaken to supply the goods on his own account by issuing his own invoice is the meaning of it. Further, one example, agent to principal. A distributor returns the unsold goods to the manufacturer, meaning what? Maybe the agent who receives the goods to whom he already sold as a sales returns. That goods are received by agent on behalf of his principal, and that goods are made available by the agent to his principal. In that case, supply of goods by the agent to his principal, where the agent undertaken to receive the goods on behalf of the principal on his own account. In that case, such a supply made available by agent to his principal will also attract the GST, is the meaning of it. Don't worry. After coverage of all these particular points of scope of supply includes or excludes, I am going to take up advanced concept of scope of supply. These are the points I am going to illustrate with the help of numeric example by inviting the attention on the part of RTP, MTP, followed by past exam questions of CA, CMA, CS. Is clear, my dear friends? Further referring, point number 4, last point of the schedule 1. Import of services from related person or establishment outside India. Establishment outside India, nothing but what? Head office, branch office. Head office outside India, branch office in India. Branch office import the services from head office is the meaning of it. In that case, examples one by one here. Import of services from related person. As you understand, related person means, as I referred to earlier, services received from related persons or establishments located outside India are treated as supply under the GST even without consideration. Business purpose requirement should be exist. The import of service must be used in the course or furtherance of business to qualify as a supply under this provision. No consideration scenarios. The provision specifically applies to situations where services are received without any consideration or payment. Therefore, import of services by a real person or an establishment from outside India in the course or furtherance of business, in that case, even without consideration is a supply, meaning of it. Further, my dear, examples I am bringing to notice: import of services. Scenario: an Indian branch of a multinational company avails design services from its head office in USA without payment. It is import of services by a person from their establishment outside India is the meaning of it. In that case, even with the consideration, is a supply. GST applicability. GST is applicable under the reverse charge mechanism under the RCM. IGST will apply in the hands of recipient. Further, my dear, key points to note: without consideration, the transaction may be without consideration, but it should be import from whom? From a real person or from a distinct person. Further, employee-employer relationship is not treated as real parties if the gift given by employer to the employee not exceeding rupees 50,000 in a financial year. Import of such services, which is from related parties or from an establishment outside India by an establishment in India, liable to pay IGST under the RCM, even though that is imported without consideration in the course or furtherance of business, is the meaning of it. Further referring to here, my dear friends, the summary of this: permanent transfer of business assets. Yes, input tax credit on which I availed is a supply, even without consideration. Transaction between related persons, transaction between related persons or distinct persons, even without consideration, is a supply. Gift to employee by employer, not exceed rupees 50,000 rupees, neither goods nor services. GST is not applicable if the value not exceed rupees 50,000. Exceed rupees 50,000 will attract the GST in the hands of the supplier. Principal agent transactions, principal to agent or agent to principal, where the agent act independently, in that case, supply, even without consideration, will attract GST. Import of services by a person from their related parties or from their establishment outside India, even without consideration, is a supply if they import the service in the course or furtherance of business. RCM apply. I said what I referred so far, I summarized in the given case. Further referring to you, my dear friends, RCM for import of who liable to pay GST? Recipient liable to pay GST in India. Is it clear? This ensures the GST is collected on import services even when there is no consideration involved. Further, practical scenario: stock transfer. One example I am bringing down is stock transfer between the states, between the distinct persons. In fact, branch transfers of goods between states treated as supply in a taxable supply under GST, even without any consideration, even though they are within the same entity. That means X Limited Mumbai, X Limited Chennai. X Limited Mumbai supply the goods to X Limited Chennai, or X Limited Chennai supply the goods to X Limited Mumbai, is under the supply, even without consideration, will attract GST. Further, GST tracking system. This taxation mechanism ensures that the movement of goods between different states is properly tracked and taxed within the GST framework. For that, they are going to charge. Fine. Further, my dear friends, practical scenario: non-monetary gift. Non-monetary gift exceeding rupees 50,000 in a financial year are taxable supply. The 50,000 rupees limit applies per employee per financial year. We are aware of that. GST is applicable on the entire amount exceeding rupees 50,000. If it is rupees 60,000 in a financial year, on the entire 60,000 GST will apply, is the meaning of it. Further, practical scenario: employee benefits. Monetary gift or salaries are excluded from the GST. Why? Monetary benefits or the gift, salary and all exclude from GST. Why exclude from GST? Because that particular value will attract income tax under the Income Tax Act. Therefore, what is going to be taxed in the income tax under the head salary, not going to be taxed under the GST law, is a clarification of the CBIC. Further, my dear friends, IT company with multiple branches. One, take scenario, case study. Scenario, an IT company has branches in Mumbai, Bangalore and Delhi. The Mumbai branch develops software which is then used by the branch Bangalore and Delhi branches for client projects. In that case, Mumbai branch giving that developed software to their branch Bangalore and Delhi to further supply to the client. In that case, supply between Mumbai to Bangalore and Mumbai to Delhi branches will attract GST even without consideration. Is the meaning of it. GST implication. The transfer of software from Mumbai to other branches, even without consideration, is treated as supply under the GST, under the Schedule 1. GST needs to be charged on their fair market value of the software. That open market value, how to arrive and all, will be referred in the valuation chapter of the value of supply. Further, my dear friends, multinational company services. One case scenario. A multinational company, namely Indian subsidiary, receives management services from its parent company in the USA without any charge. The recipient, namely subsidiary company in India, should pay IGST on such import of services because they have imported in the course or furtherance of their business this import of services. So, GST implication. This transaction falls under the import of services from related person. The Indian subsidiary company needs to pay the IGST under the reverse charge mechanism on the fair market value of the services received, namely open market value, which is again referring rule number 28 of the valuation rules. There we'll refer these points, or rule number 29 in fact, because related party transactions. Is clear, my dear friends? Now I'm referring to you, my dear friends, important section 7 subsection 1 capital A of the CGST. What it talks about? It talks about when there is a supply, is it supply of goods or supply of services? If that confusion comes into picture, refer the schedule 2 of the CGST Act, where there are 6 points elaborated by saying that so and so case supply of goods, so and so case supply of services is declared under section 7 section 1 capital A. Therefore, one should follow strictly such classification to avoid ambiguity in application of GST rates on the supplies. Got the clarity? Which I am presenting now one by one is as follows. For kind consideration, my dear sir, is as follows. Section 7 section 1 capital A refers schedule 2. What is it says as follows. What is the purpose of schedule 2? Here, schedule 2 of the CGST Act serves a crucial guideline for classifying activities or transactions as either supply of goods or supply of services. This classification is fundamental for ensuring clarity in taxation and facilitating compliance with the GST regulations. How to understand? Simple. Is it supply of goods? Apply appropriate rate. If it's supply of services, apply the appropriate rate. If there is a supply as well as supply of goods, supplies both are involved, it should be decided as supply of service. If so, accordingly to pay GST. Like that, clarification is given, clarity is given to avoid the ambiguity in taxation under GST. Importance in the GST framework. By providing a clear framework For classifications, Schedule 2 helps businesses and tax professionals determine the appropriate tax treatment for various transactions. This clarity is essential for accurate tax calculations, exporting and overall, sorry to say, reporting and overall GST compliances. Key points under section 7 subsection 1 capital A. Read with schedule 2. What is this key provision here? Section 7 subsection 1 capital A emphasizes that certain activities or transactions in accordance with subsection 1 of section 7 shall be classified as supply of goods or supply of services as referred to in schedule 2. That means to say what? As you are already aware of that, we come across by referring sometimes before section 7(1) class A, class B, class C, in between class AA. We got it or not? In that case, section 7 subsection 1 class A, supply of goods or services such as the what we can call sale, transfer, barter, exchange, license, lease, agreement, the disposal. We got no in that cases. Or class AA, non-individual to its members and members to its non-individual. In that case, or import of services for consideration whether or not in the course of presence of business, namely class B. Class C, just now we referred to transaction covering schedule 1 without consideration. In all these cases, supply of goods, supply of services, any clarification required, refer section 7(1)(a) where it says that please consider section 7 subsection 1 capital A, read with schedule 2 is the meaning of it. Transaction covering under section 7 section 1 class A, class AA, class B, class C is any doubt to classify as supply of goods, supply of services, please refer schedule 2. They will give the clarification is the meaning of it. Having this, further referring to you, my dear friends. Sale of company vehicle. What happened here? Title on the goods transferred. That means supply of goods is clearer. Further, referring to here, transfer, leasing of machinery. Here, title not transferred. Right to use transfer, but not right to own transfer. In that case, supply of services. Accordingly, you have to pay the GST. Further, referring here, deferred ownership in goods. Meaning what? Especially hire purchase. Today I sold the goods. Down payment 1 lakh. Balance you are going to pay in installments for 11 months. In that case, is a hire purchase agreement which consists of hire purchase price, namely cost plus, namely the principal plus interest. So in that case, hire purchase agreement is called as supply of goods. Though the title may be transferred at the end of the last installment, when the hire purchaser making the payment to hire vendor, all payments include last installment. In that case, no problem. Now itself we can say that it is called as continuous supply of goods nature will be considered here, and accordingly part payment received, part payment of GST will attract. Got the clarity, my dear friends? Supply, when the supply of goods on which ownership is deferred over a period of hire purchase agreement. In that case, the law of the land says that is supply of goods liable to pay GST on the part amount received by the supplier. Is clearer? Further, my dear friends, referring here, land and building, commercial property rental. Here there is no title has been transferred. Only the right to use has been transferred. Supply of services. Commercial property taxable. Residential property to unregistered person exempted, which you are aware of that as supply of service nature. Industrial land and lease, land and building, where the name itself lease. Lease means what? No title transferred, only right to use transferred, is called as supply of services, is classified. accordingly to classify. Further, land and building residential use rental exemption. Obviously, if the supplier may be a registered residential person given on rental basis a residential property for residential dwelling to individual who is unregistered person, in that case obviously it is exempted supply if the recipient is using that for their residential purpose. Further, my dear friends, treatment or process, namely job work. Job work cases, I am carrying out treatment or process on the goods of the others. See, I taken from you this particular mouse not functioning. I did the repair and given back to you. I what provide the services? Supply of services. Now functioning very well. In that case, supply of services but not supply of goods. Take practical examples. In the given case, textile dyeing and printing. Best example. Undyed fabrics received from a manufacturer for processing, ready for color treatment. Dyeing process did by job worker. On such particular undyed cloth, dyeing has been taken place. Dyeing means like this, uh, pouring in particular colored uh, uh, water the cloth and making some days to be stay there, thereafter removing it, and printing services, additional designs or patterns printed using specialized equipment, you see, neatly designed and given the cloth after dyeing, given the cloth is usable for stitching and all. In that case, final product, completed textile ready for delivery, treat as supply of service because the job worker is taken the goods from the manufacturer, undyed fabric, and he dyed and made printing and given back. In that case, such a process is called job work, namely supply of services. Further, my dear friends, Schedule 2 explains treatment plus equipment repair. Obviously, it is called what? Supply of services because the person who did the repair on the goods of the other is supply of services. While providing supply of services, the supplier may be use his own material as the consumables. Still, as a whole, it is called what? Supply of services, not the supply of goods. Further, transfer of businesses, sale of office furniture for consideration or without consideration, as the case may be. There is a supply of furniture, permanent transfer, supply of goods. Further, my dear friends, here referring transfer of businesses for personal use means title not transferred, right to use transferred. Right to use transferred, always supply of services. Further, my dear friends, owner ceases to be a taxable person. I am a registered person, an individual. So far, I am paying GST. Now, I want to retire from the business. I am closing down my business. In that case, what? Going concern going to wind up. In that case, the business assets will be treated as supply of goods. Am I liable to pay GST? Yes. Unless until I pay GST, my registration not going to be cancelled effectively. Got the clarity? Now, examples referring here. Business closure. When permanently shutting down business, owners must pay GST on all assets, including inventory, equipment, and capital goods, before cancelling the registration which is lying in the organization. Asset valuation will be done as per the valuation section 15 concept and valuation rules. The key exceptions, very important here. The GST payment on such assets is not required when means business is transferred as a going concern, business carried by a personal representative. In these two cases, the supplier not considered as a supply of goods. What do you mean this? I will give an example to you here. Sir, simple example. there is A Limited and B Limited, two separate in companies, separate registered person under GST law. A Limited, B Limited merging together under the amalgamation. They amalgamated and incorporate new company AB Limited. The assets liabilities of A Limited, assets and liabilities of the B Limited becomes assets and liabilities of the AB Limited. In that case, A Limited and B Limited is ceases to exist. That time, their going concern going to continue in the name of AB Limited. Therefore, such cases, A Limited as well as B Limited not liable to pay GST. Their transfer of assets to AB Limited, not supply of goods. Is it clear, my dear friends? Referring further to you to further referring here. Transfer of business assets. That is what just not exceptions. Going concern transfer. Business transfers maintaining operational continuity are exempt from GST when they are transferred as a complete functional unit. Personal representative management. GST exemption applies when the business operations are carried out by an authorized personal representative. For example, I am Mr. Rafi, owner of the Rafi Academy. I am the registered person. Now I am going to USA for long period of time. Therefore, one of my students qualified to whom I am handing over my particular Rafi Academy to continue on behalf of me. He is my personal representative. Such like that, I have handed over my academy to a particular qualified CA or CMA and I left to USA. In that case, my supply to him is not a supply of goods, not a supply liable to pay GST, not liable to pay GST. Further, my dear friends, but there must be a regular, proper legal compliances should be followed. Further, my dear friends, supply of services, renting of immovable property. When I say renting of immovable property, the nature itself right to use, not right to own. Therefore, supply of services. Residential nature, obviously exempted if the recipient is an unregistered person using it for his personal residential dwelling purpose, then exempted. Which is exempted, not liable to be decide what is supply of goods, supply of services. As a supply of services, exempted. Further, my dear friends, construction services, where material involved as well as labor involved, land value involved. As a whole, composite nature, but the law says it is a treated supply of services. Liable to pay GST? Yes, unless in exceptional cases. When liable to pay GST? Ongoing constructions, the prospective buyers book their flats, the supplier liable to pay GST. When not liable to pay GST, is as follows. Is exceptional cases. Construction services are excluded from the GST when full payment is received under either of the conditions. After obtaining completion certificate from the competent authority, otherwise after the property's first occupation among the two, whichever is earlier, after that entire consideration has been received by the supplier of construction nature, then qualify from exemption. Meaning what? It is neither goods nor services. Therefore, not attract GST is the meaning of it. Further, my dear friends, intellectual property right, where is it temporary transfer or permanent transfer? Permanent transfer, supply of goods. Temporary transfer, supply of services. Got the clarity, my dear friends? Which is copyright, patent, trademarks come under the intellectual property right, where the right to use transferred, supply of services. Further, my dear friends, infrastructure, namely the information technology software development services, where the content available to download through online, readily available, customized or customized one, tailor-made one, If the tailor-made one, supply of services. Ready-made one, supply of goods. How to understand this? With help of case law also we have. In case of in the information technology, IT software development services are considered. The Supreme Court of India said in the case of Tata Consultancy Services TCS case, they said each and every transaction should be looked into the way it is moving. Meaning what? When this goods means the case referred by the Supreme Court by saying that utility, ability to be sold, transmitted, transferred, delivered, stored, and processed. These are all goods nature, supply of goods. If it is customized one as per the requirement of the buyer has been developed and given, supply of services. So, in a simplified manner, further to how to understand this, online delivery of software, supply of services. Software is delivered electronically over the internet without any physical medium. Nature of supply, despite being intangible, the software provides utility and can be stored digitally. GST classification, treat as supply of services under the GST, reflecting the mode of delivery and usage. It is delivered through online, which is supply of services. If it is physical mode, physical media, like when software is delivered on physical media like CD or USB drives, it combines elements of both goods and services. The tangible medium carries the tangible, namely intangible software. See, tangible medium carries the intangible software, meaning it is intangible software is nothing but CD or USB carrying intangible, meaning thereby, I'll tell you. Here, the tangible medium carries intangible software. Tangible medium means USB drive, which is carrying intangible software. Means a briefcase is a tangible. Inside, intangible software is carrying. In that case, is supply of goods. GST treatment. Despite the digital nature of the content, this transaction is treated as supply of goods under GST. The physical medium becomes the determinant factor in classification. For giving a clarity by taking the reference from the TCS company case of the Supreme Court of India. Is clear, my dear friends? Further referring to here, non-compete agreement, very important this one. Agreement nature, non-compete agreement involves one party agrees to refrain from certain actions or tolerating specific situation. Business context, often used in employment contract, business sales or partnership dissolutions to protect business interest. Consideration typically involves payment for the agreement to not to compete or to tolerate certain business activities. GST treatment, classified supply of services under GST with tax applicable on the consideration received. In the case of tolerating an act or a situation or to do an act is very powerful supply of service nature, which supported by a detailed explanation given by CBIC. In this regard, a circular has been issued. These and all I am going to refer under the advanced concept of scope of supply. Further referring to here, what I said here is non-compete agreement, supply of services, tolerating an act or a situation or to do an act is supply of services. The consideration will attract GST at applicable rate. Further referring here, Right to use goods. Right to use goods means what? Is supply of service only. Right to own goods, supply of goods. Right to use goods but not right to own goods is supply of services. As simple as that. Example, the category includes equipment, rentals, vehicle leasing and temporary usage rights for machinery or other assets. The key factor is the ownership is not transferred. Only the right to use transferred. As a whole, such a right to use goods is taken place. Dash type of supply? Supply of services. Further, my dear friends, composite supply was contract where the material involved, labor involved goes hand in hand. One cannot able to separate from the other. In that case, such a was contract in relation to plant and machinery, such a was contract in relation to an immobile property is called what? Supply of services. GST point is supply of services. Though it involved material, is as a whole called as supply of services, will attract the GST according to as supply of services. Further, my dear friends, restaurant services, catering services, employees or the person who providing food services, namely self in case of what we can the person who supplying the food, manpower services, all together sale of goods, service, namely restaurant fellow selling the food item and also providing service by bringing the food to the customer place in a plate. Then as a whole, it involves supply of goods, it involves supply of services. As a whole, it is called as supply of services. GST implication is supply of services under the GST as a one particular supply. Is clearer, my dear friends? As simple as this, schedule 2, which talks about what is supply of goods, what is supply of services, declared you have to follow strictly because it is under CGST Act referred by section 7 subsection 1 capital A, which has legal backup. Got the clarity, my dear friends? What is the key takeaways? Clarity in transaction. Yes, we got it. Importance of specific nature. Yes, is supply of goods, supply of services. Composite supplies declared as one side. In case of works contract, supply of services. In case of restaurant, supply of services. In case of construction, supply of services. Exceptions and exemptions. Certain transactions like residential property given on rental basis for residential purposes to understand individual is exempted nature. So these are the key takeaways from the Schedule 2 of the CGST Act. Got the clarity, my dear friends? With this, Schedule 2 read with Section 7 Section 1 capital A is completed. Now referring to you, my dear friends, supply excludes Section 7 subsection 2 clause A, namely Schedule 3 transactions. Now these are 10 transactions under the Schedule 3 supply excludes after the introduction of the Finance Act 2024. I will refer one by one, is as follows, my dear friends. If you refer here, first one, services by employee to employer in the course of employment, which is supply excludes, no GST. So what happened? If employee provide the services to the employer not in their employment, not form part of employment. For example, Mr. Vikram is an employee of X Limited, and Vikram being an employee who is a finance manager but provide the services to the employer, let us say interior decorating services, or by virtue of his professionalism he provide Vastu Shastra services to the company, which is not in the course of employment at all. In that case, such a supply will attract GST if the supplier is a taxable person. So my point to say here is, as long as you being an employee provide these services to the employer in the course of employment, where that particular supply taxed under the head salary under the Income Tax Act 1961, we are not going to be touched at all under GST law. Supply excludes is the meaning of it. Further, my dear friends, point number 2, services by court or tribunal like district court, high court, supreme court, if they provide these services by virtue of the constitutional authority, if they provide the services of hearing the cases by collecting the fees collected to allot the case number and all, will absolutely supply excludes. Not only the court but also tribunal like GST, Goods and Services Appellate Tribunal, fee paid to the tribunal for applying the application to file a case. In such case, that fees is absolutely supply excludes. Likewise, appealing to ITAT, Income Tax Appellate Tribunal, the fees paid to them for filing the appeal to qualify the appeal, which is absolutely supply excludes. Not only court and tribunal, but also CBSE has been clarified. Consumer Dispute Redressal Commission, generally they hear the cases from the consumers, dispute cases. In that case, the fees paid to the Consumer Dispute Redressal Commission or their subordinate offices obviously considered as supply excludes as per the CBSE circular. Followed by, my dear friends, point number 3, services by our honorable members of the parliament, our honorable members of the legislative assembly or MLCs or our honorable panchayat board members, councillors, if they provide these services, are not considered as supply. Supply excludes. 3 points we referred out of 10 points. 1, employee to the employer in the course of employment. 2, the court or tribunal services, including the Consumer Redressal Commission and subordinate offices services. 3rd one, MPs, MLAs, members of the panchayat or municipalities absolutely qualify for supply excludes category. Qualify for supply excludes. Neither supply of goods nor supply of services. No GST. Point number 4, funeral and burial services to a deceased person. Service related to funeral, burial, crematorium or mortuary, including transportation of the deceased, are not considered as supply under the GST. Supply excludes. 4 points we covered. Point number 5, sale of land and building, which is immovable property. Therefore, not considered as a supply of goods, not supply of services. Sale of land, sale of building. Sir, building should be supplied after obtaining completion certificate. In such cases, not qualify under the construction supply of services. Therefore, supply excludes. That's why I referred here by saying that sale of land and subject to clause B of paragraph 5 of the schedule 2, sale of building are not considered supply of goods or services, not supply. That means construction supply taken place after completion of completion, ready to occupy, or the certificate received from the competent authority. After that, supply taken place, meaning thereby immovable property, which is neither goods nor services. Therefore, sale of land building supply excludes. Further, my dear friends, actionable claims. Point number 6, actionable claims. What are they? Traditionally, insurance claims for damage or losses, outstanding rent payments, recovery of loan amounts, unsecured debt instruments are called as actionable claims, neither goods nor services. Financial instruments like bank guarantees and letter of credit, fixed deposit certificates, commercial paper and bonds, negotiable instruments, promissory notes are come under the actionable claims, neither goods nor services. Therefore, not a supply. But other than specified actionable claims, meaning specified actionable claims are called supply of goods. It included in the scope of supply. What are they? Lottery, betting, gambling, horse racing, casino, online money gaming, which will attract GST in fact 28%. Therefore, actionable claims other than specified actionable claims, supply excludes. Further, my dear, point number 7, cross-border transactions. Meaning what? Supply of goods from non-taxable territory to non-taxable territory without entering into taxable territory. What is taxable territory? India. Non-taxable territory outside India. Goods are moving from one country, namely foreign country, to another foreign country without coming the goods into India. Such a supply of goods is supply excluded, covered under Schedule 3. Examples one by one I am referring here. Look here. Supply of goods from a place in the non-taxable territory, let us say from USA, to another place in the non-taxable territory, let us say to London, USA to London, without such goods entering into India. In that case, absolutely we consider it as supply excludes manner. Example. Dear friends, I am C of Chennai. I got a purchase order from A Incorporation of USA. For supplying that goods to A Incorporation of USA, Mr. C of Chennai from India approached M of Mexico. Mexico wala agreed to provide that goods directly to USA Incorporation, A company, A Incorporation, and billing to C person in India. That means Mexico company is shipping the goods to USA, billing to India. In that case, the transaction has been completed, then C of Chennai raising the bill, namely sales invoice against A Incorporation of USA. In such case, supply made by C to USA person, supply excludes, because these goods are moving from Mexico non-taxable territory to USA non-taxable territory without coming that goods into India. Therefore, in India, such a supply is excluded, covered under the Schedule 3 of CGST Act. Got the clarity? Further referring to my dear friends here, warehoused goods. Supply of warehoused goods to any person before clearances for home consumption. Meaning what? I import the goods. I am a C Limited of Chennai. Import the goods from, let us say, from Malaysia. The goods are coming through sea to customs. Goods reaches to customs port, where the importer requested the customs authorities to warehouse that goods. That goods are warehoused, duty yet to pay. In such case, during the tenure of warehousing, that goods the importer in India sold to another person in India. The goods remains in the warehouse. In such case, that supply before clearing for home consumption is not a supply, not liable to pay GST. Further, supply by consignee, supply of goods by the consignee to another person by endorsement of documents of title to the goods after the goods have been dispatched from the port of origin located outside India but before clearances for home consumption. What do you mean this? A simple example. There are furthermore examples. Simple example I am presenting here for the given case. C Limited place the order to procure the goods from, let us say, Indonesia. The goods dispatched from Indonesia and about to reach to port in India. Then C Limited, owner of that goods, yet to receive to India, which is transferred, that goods title transferred C Limited to D Limited of Delhi in India. Such a supply is excluded from the scope of supply. Therefore, C Limited not liable to pay GST in India. Got the clarity? This will be explained to you elaboratively in the following lines. Understanding warehoused goods. Simple, my dear. Look here. Imported electronics stored in customs bonded warehouse before clearing customs and paying applicable duties. These goods can be changed ownership while in storage without triggering GST. Further, vehicles trading in bonded storage, car imported can transfer the ownership of vehicle to dealers while the cars remains in the bonded warehouse before customs clearances and before payment of import duty. That means imported goods are warehoused before clearing for home consumption. That goods title transferred by the owner to somebody else in India, which is not a supply. Further, commodity storage and trading. Bulk commodities like crude oil can be traded between companies while stored in bonded warehouse, with ownership transfer happening through documentation before custom duties payment. So the warehouse goods before clearing for home consumption, title thereon transferred by owner to another person for consideration is not a supply. Supply excludes this transaction. Further referring here, continuation of schedule 3, point number 9, which is amended one, newly added from the Finance Act 2024. Co-insurance premium apportionment, which is not a supply. New provision with effect from Finance Act 2024, namely 1st November 2024, this provision is activated. Inserted schedule 3, supply excludes. Activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance services jointly supplied by the lead insurer and co-insurer to the insured is co-insurance agreement. Okay. What is not a supply? Co-insurance premium is not a supply. Condition. Subject to the condition that the lead insurer pays central tax, state tax, UT tax or IGST on the entire amount of premium paid by the insured. Whatever we apply has to pay the GST on the entire value of premium. How to understand? Example makes crystal clear this point. Let us take one example. Co-insurance premium apportionment. What is supply excludes? Let us say there are 3 insurance companies jointly giving co-insurance to a particular large commercial property where the premium amount is 10 millions of rupees. In the given case, lead insurance company New India Assurance 40% premium they are taking. Then other 2 co-insurance companies, United India Insurance Company 30% is loss of coverage, Oriental Insurance 30% loss of coverage. So the 10 millions of rupees of premium sharing between 3 companies. New India Assurance taking here 4 millions of rupees premium and 3 millions premium each by United India Insurance and Oriental Insurance Company taking as their premium. Now, as a lead insurance company, New India Assurance is paying GST not on 40% of their premium, but the entire premium of 10 millions on which GST is paid by New India Assurance. In that case, the co-insurance companies collecting the premium, each 3 millions of rupees by United India Insurance and Oriental Insurance is supply excludes. That part of co-insurance premium supply excludes. Since the entire insurance premium of 10 millions of rupees, GST paid by lead insurance company in the given case is New India Assurance Company. Therefore, the reinsurance is supply excluded. Is clearer? Is one point. Further, reinsurance services, point number 10 in the schedule 3, newly added amendment, supply excludes. Reinsurance services. What do you mean by reinsurance company? Reinsurance, nothing but what? One insurance company undergoing for paying the premium to another insurance company to dilute the risk. Then it is called reinsurance. Now, in the given case, my dear sir, one should understand the concept. With amended provision in schedule 3, newly inserted as a point number 10, supply excludes services by insurer to the reinsurer for which ceding commission or the insurance, namely the reinsurance commission, is deducted from reinsurance premium paid by the insurer to the reinsurer is absolutely supply excludes. I will make you understand, don't worry. Condition should be satisfied. What condition? The reinsurance premium collected by the reinsurance company should pay the GST on the gross amount of reinsurance premium. How to understand? Furthermore simplification with the help of example. Look this example, my dear, which makes crystal clear to you. Let us say reinsurance example 1. Agreement. An insurance company, insurer A, insurance company means insurer A, enters into a reinsurance agreement with a reinsurer, namely reinsurer B, to mitigate its risk exposure, obviously. Risk transfer. Insurer A cedes 50% of its insurance risk portfolio worth rupees 2 crores to reinsurer B. For doing so, reinsurer B pays ceding commission of rupees 10 lakh to insurer A, because that much of business is giving to reinsurer B by reinsurer A. Therefore, commission paid by reinsurer B to insurer A. With how much? 10 lakhs. Such 10 lakhs of ceding commission for reinsurance absolutely supply excludes. Furthermore, explain to you with the help of example. Don't worry at all. Here, take a scenario in case of reinsurance. Insurer HDFC Ergo General Insurance underwrites an insurance policy for 50 crores for a large commercial complex. So, the policy worth how much? 50 crores. If any loss happen, 50 crores has to pay by HDFC Ergo General Insurance Company. Now, HDFC Ergo General Insurance Company undergoing for reinsurance to dilute the risk. Reinsurer Swiss Re, a global reinsurance company, agrees to reinsure 50% of the risk under a proportional treaty agreement. That means 50 crores of the risk divided in two parts. 25 crores to HDFC Ergo and 25 crores of risk going to handle by Swiss Re. Now, in the given case, such a huge business given by HDFC to Swiss Re. In that case, the risk transferred 50%, namely 25 crores. 50% of 50 crores, 25 crores. Reinsurance premium charging by Swiss Re from HDFC Ergo. How much premium? 1 crore. For 1 crore reinsurance premium, who is supplier? Swiss Re. Recipient? HDFC Ergo. Now, such a huge business got by Swiss Re because of HDFC Ergo given reinsurance. For doing so, HDFC Ergo charging reinsurance commission from Swiss. In that case, ceding commission, Swiss Re agrees to pay ceding commission 15 lakhs to HDFC Ergo as a reinsurance amount for acquisition cost and all. In that case, what happened here? In that case, such 15 lakhs of reinsurance commission supply excludes, covered under Schedule 3. Reason with the condition. Hey, Swiss Re, you being a provider of reinsurance, charging the gross premium how much? 1 crore. On the entire 1 crore, GST liability is supposed to be paid by Swiss Re. Therefore, this reinsurance commission supply excluded. This is what? The Schedule 3. But here, if co-insurer in the earlier case, GST already paid on co-insurance premium, not required to pay. Now, the law says with retrospective effect from 1st July 2017 onwards, not liable to pay. But already paid, can I claim refund? No refund. Sir, earlier I reversed the credit, now I can claim a refund of that? No. It is known as is, where is should be maintained. If you already paid, don't ask any refund. If you already not paid, we won't ask you to pay, says by the government. How to understand this? Simple. Look here, my dear sir. Here, before going for that as is, where is concept, I am explaining here GST implication for proportional treaty reinsurance. Reinsurance just now I explained, no. For that, the conclusion. Ceding commission. The ceding commission of rupees 15 lakhs paid by Swiss Re to HDFC Ergo is treated as no supply under Schedule 3 and is not taxable. Very good. Reinsurance premium, yes, taxable. Swiss Re must pay GST 18% on the gross premium of 1 crore reinsurance premium to cover the loss of stock of 25 crores. Summary of tax liability. Ceding commission, no GST because not a supply. GST and reinsurance premium, 1 crore liable to pay by supplier. Namely, in our given example, Swiss Re. Taxpayer, Swiss Re pays GST on the gross premium. Is it clear? Further. No refund clause. No refund shall be made of all taxes paid or the input tax credit reversed, which would not have been so paid or not reversed had section 114 been in force at all material items. Meaning what? Power to appeal the cases. The given case here is, they said, very clearly mentioned, the tribunal and all, you have to consider this particular section 114. Even the person, anybody coming for refund, do not grant the refund, is the meaning of it. How to understand this clause? I will explain to you. Practical example. No refund of tax paid. How to understand this? Background study. Just now we referred in case of reinsurance. Before amending section 114, New India Assurance, namely lead insurer, taken the 40% of risk, balance 30% and 30% to co-insurance companies. United India Insurance and World Insurance, if paid the GST, which is, let us say, 54,000 each, namely, in that case, 10 lakhs is the premium, divided into three parts. 4 lakhs for New India Assurance, 3 lakhs for the United India Insurance, and 3 lakhs World Insurance. So the 3 lakhs on which 18% GST, 54,000. Who paid the GST? By co-insurance companies, namely United India Insurance and World Insurance. Already paid GST. The law now clearly says, which is not a supply, not required to pay GST. Are they eligible to claim refund? Refund not allowed. Who asked you to pay? Refund not allowed. If not paid, we won't ask any tax thereon. Is the meaning. As is, where is concept implemented. Is clear, my dear friends? Further, in case of reversal of ITC on seeding commission, how to consider this? ITC reversal on seeding commission. If reverse the ITC before the amendment, before 1st November 2024, now we came to know that it is seeding commission, not a supply, not required to pay GST at all. In that case, the reversal of ITC earlier proportionately to the extent of seeding commission, now you cannot re-avail the ITC, nor you can ask for refund, is the scenario. How to understand this? Simple example. Referring here, scenario, insurer, cedent, ICICI Lombard General Insurance, which is main insurance company. Reinsurer, Swiss Re. Arrangement, ICICI Lombard cedes 40% of insurance portfolio worth rupees 50 crore to Swiss Re under a proportional reinsurance agreement. Reinsurance premium paid to Swiss Re 2 crore. Ceding commission, namely ceding commission, received from Swiss Re by ICICI Lombard, let us say 40 lakhs. Now, input tax credit claimed by ICICI Lombard 10 lakh on various input services like acquisition, administrative, marketing expenses they received inward supply, on which the input tax credit is 10 lakh. Their output supply, ceding commission 40 lakhs. Whose output supply it is? ICICI Lombard General Insurance output supply 40 lakhs reinsurance premium, which is they treat as exempt supply. 10 crores is a taxable turnover where the insurance premium collected from the policy holders for taxable insurance services 10 crores. Totally 10 crores 40 lakhs total more. Now input tax credit, common credit ITC 10 lakhs. This common credit ITC 10 lakhs proportionating into two parts. Portion of input tax credit attributable to exempted supply, namely for 40 lakhs, is equal to 38,500, which is exempt output supply. Therefore, the ICICI Lombard reverse their input tax credit to the extent. Repeating, common credit input tax credit 10 lakhs multiply with exempt turnover 40 lakhs divided by total turnover, namely 10 crore 40 lakhs. The common credit attributable to exempt output supply 38,500, which is they reverse the credit by following the proportion reversal concept as reference rule number 42 of the CGST rules. At a later date, what happened? Amendment taken place with retrospective effect, where after the amendment with retrospective effect from 1st July 2017 onwards, from appointed day onwards, the law says such a reinsurance commission not a supply. Resultantly, common credit attributable to reinsurance commission not required to reverse, but already reverse the credit by the particular ICICI Lombard insurance. In such case, now can I re-avail the ITC? Asking ICICI Lombard, no. Can I ask for refund of the reversal of credit? No. What you have been reversed, not required to reverse, is a final. That is, as is, where is concept maintained. Got the clarity, my dear friends? Finally, supply excludes section 7 subsection 2 class B, where activities undertaken by central government, state government or union territory or local authority in their capacity as a public authorities are potentially excluded from the supply subject to notification. Now notified, there are services notified like liquor license granting services by government to liquor license holders is fee collected, supply excludes. You got my point? Like that, the interstate transfer of movement of vehicles, which is not for meant for further supply between distinct persons, is notified as not a supply. Therefore, the government or local authority has right, if they provide the services to meet the objectives of Article 243G or Article 240W of the Constitution of India, and they are empowered to notify their supply qualify for supply excludes category. With this, I can say that the scope of supply includes, the scope of supply excludes. In toto, we have covered, my dear friend.